All right, good morning, everyone. We'll get going. All right, U.S. markets, another pretty much sideways day, really light volume. U.S. session kind of ahead of and on the back of some major earnings. Obviously, we had Apple out overnight. We also had a few other reasonable players announce. And then we also had Richmond Fed manufacturing numbers yesterday, which was a little bit disappointing. So all in all, I mean, just very light reaction on anything that's happening right now. You're starting to see just a real sideways market with very low volatility at the moment. So I think it's a little bit of a calm before the storm potentially setting up for us. We had overnight, like we said, we had Apple after hours, and then we had PMI numbers out of China, which missed expectations. They were the lowest in 11 months. And I actually think it's quite impressive how well China and the other Asian markets shook those numbers off. Just kind of shows you what kind of market that we're actually in at the moment. We had commodity prices that made a nice little move as well at the end of the U.S. session last night. We had gold that spiked up to test resistance. We have copper that also traded well above 320. And kind of across the board, we saw commodities trade well last night, but giving back some of those gains this morning on the back of the worse than expected Chinese PMI numbers. All right. Last night, like we said, we had Apple better than expected, 747 versus 730, and 35.32 billion versus 35.04. So a nice little beat there. I think they're up about 5% after hours. We also had AT&T that came out after hours. It was a small miss, 67 versus 68, and the revenue number is actually a small beat, so moderately in line for AT&T. Okay, today before the bell we've got Eli Lilly. We've also got Pepsi, Ford, Boeing, Caterpillar, Qualcomm, and Visa. I mean, I would say today is probably the best diversification of pure industrials, with your Fords and Boeings and Caterpillars. Probably the most diverse day of earnings because you also have some, consumer staples and some, financial being Visa, tech being Qualcomm, and PepsiCo being kind of a non-cyclical. So, really, really diverse day of earnings. I think also it's important to take note. I mean, we're getting well into earnings season now. Earnings season has been incredibly disappointing. I think if you back financials out, we've actually had negative earnings growth this quarter, which is really, really bearish in my mind. And I think we're waiting maybe for us to get to the right spot technically, or for markets to blow off the top before we actually get a reasonable correction out of the States, because earnings just have not been there. All right, let's jump into the maps. Okay, the first thing I wanted to show here is the USD ZAW. Right, which is obviously broken out from this 980 level that we've been talking about. So I mean, when you really look at, let's go on kind of a closing basis here. I would look at the level from 1025 to 980. So we're going to look for 45 cents to break through maybe, which takes us almost exactly here to 935 support, or sorry, I should say support on the dollar. So that's kind of what I would say our target is down here, testing around 935. This is a real clear breakout. I mean, you can see here how definitive this pattern is. I really think that it's probably caught a lot of people out short on rands, and so you could see a bit of especially if markets hold on to the levels that they're at the moment. I think you'll see a bit of a squeeze here to the upside in the rand. So just watch this one closely. We could trade all the way down to 935 in the near term. All right, next thing we'll look at is Aussie. Where we can see again yesterday, we tested the whole day yesterday. We were trading right around 36,500 or even just above. You can see here we've opened down this morning about 100 points at 36,380. I think this will be a monster fail if we don't get through especially after yesterday's action, which looks so promising kind of the whole way. You can kind of see here as well. We're setting up potentially to break down out of quite a clearly defined little wedge pattern here, a nice little bounce after the initial drop, failing at support. If we kind of break through this trend line support here, I think we could have significant downside here in the Aussie. All right, let's have a look at spot gold, which we traded last night, and we talked about this the other day. This was our target to break up initially once we got above these sort of levels here. Shorten it up a little bit. Once we broke above the 1300 level, this 1350 was really what our target was. We've more or less gotten there. Let me just take it down and get it actually right now that I've got it zoomed in. And you can see there how we really tested it last night and kind of failed. We didn't. It wasn't a really solid test. So I think we could see it retest again today. Wouldn't be surprised to see that. And I actually think that commodities are holding in really well considering the PMI numbers out of China. So we could get a little bit of a surprise to the upside today on some things that you would have thought would have traded more poorly. All right, bulletins. Bulletins are showing here. We kind of failed at resistance on trendline resistance. You can see there we tested it on the wick yesterday, 291. Couldn't get above. We really came off hard, especially in the rand price, obviously, because the rand strengthened so much. But we came off nicely and closed at the lows of the day in London as well. So I think that's quite significant to see that pull back there in London at the end of the day. So really monster bounce off the lows here. I think we got down to as low as to around 250 and bulletins here locally, and we've just traded up about over 290. So we've had a hell of a run, almost probably 16-17% on bulletins over the past 3 weeks. I think that may be enough, and I think that this could be the spot to nail it here around 290 if it gets back up there in the next day or two. We could just fade from here. All right, Cecil, this is one that we talked about a couple days ago, the last couple days in general. Just this 450 level it was very important. You can see there how many touches there are of it. The one thing that I would be careful of, I'll just zoom in a little bit here, is this one close right here where you can see we closed at 52.96, 452.96, which is a touch higher than where we closed yesterday. So I would wait to see us just be able to stretch its legs above this level, maybe call it above 453, and kind of trade there for 15-20 minutes. We can kind of hold that level. I think we've got room to the upside. The initial target I'd maybe place it at 460, which would kind of be symmetrical move to the upside from this sort of range, which would take us to around 460, and then there I even think that we could trade potentially all the way up to 490 if the market supports it over the next few weeks. All right, ABSA. We had a monster breakout in ABSA yesterday. I'll just zoom back a little bit here. We're looking at the year chart. And you can see there on a closing basis, we absolutely ripped out to new highs. Not only that, we also broke out above the recent highs of this pattern on a closing basis. I mean, at one point, I think we traded almost all the way to 151 yesterday. This is a huge breakout here. Obviously, we put in lots of bottoms down here around 136, and I think that I don't know if this thing's going to have legs on the next day or two. Maybe it'll consolidate a bit, but I think if we do get some consolidation down around 145 from where we broke out, 144 to 145, somewhere there, I think it's actually worth a buy now because it's a significant breakout and a significant move from there. All right, you can see here on first trend, we've really broken out here from a flag pattern. I prefer to take these kind of things from the close. It's a little bit more definitive when you take it from the close there. And we've really been in a sort of flag wedge or narrowing wedge pattern here that we've broken out nicely from, and I think significant room to the upside here. I'd call it from maybe 28. Let's call the breakout here around 28.80. I think we could trade up to close to $30, or at least taking out recent highs, which are above 29.50. So I think this is kind of the range that I would be looking for. The target I would be looking for in first round is up around $30. If it gets above there, then I think we've even got more continued room to the upside there. All right, let's look at RMI, which we showed yesterday. Just wanted to show you how we actually did get this breakout here. We kind of chopped around and tried to get above it, and a little bit of a false breakout there, but we finally got the proper pop, the proper breakout yesterday. A monster target here to the upside. I'd say all the way up to $30 would be the target. Potentially even 31, what I would look for here is maybe just a little bit of a pullback. I think the pullbacks here to this support level need to be bought. All right, MMI is also another one that's had a nice little breakout here. The setup here is also quite nice. We kind of flagged into this move here and just narrowed into a little bit of a range before we finally broke out. I think we've got a significant move to the upside on the cards here. Same sort of thing. That breakout happened at around call it 28.90. I would say it hasn't moved enough that you can't buy it here at 23.20. And I would say that maybe a close below the upward sloping trend line could be a stop here on the MMI. And then the last one that I'll just have a quick look at here, if it'll pull up the chart. Trying to show you Netflix in the States, but it's not really popping up for me here. I don't know what's going on, if we got problems with my international data or what, but what's that? No, I don't know what's going on. Anyway, I don't know why the chart's not pulling up, guys. Sorry about that. Anyway, I was going to show Netflix also kind of breaking down from out of a beautiful uptrend. I think could have some significant room to the downside. Missed subscriber numbers. Tech earnings have been quite soft, to be honest, across the board. We could see some profit taking there. Even more to come than's already had. And that's it for today, guys. Thanks a lot.